The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on the 17th day of July. My pleasure to be here into the second part of the month. And thank you for the great program we had. Let's try to keep that standard up. Dow's up at 11 at 21,649. That sudden spike Friday, instead of pulling back, just woof, like a knife, hot knife through butter, whatever the expression is, just went straight through the resistance up to new highs, and that cancels out any negativity. So you have for my work, you've got the Dow in a buy mode. What I'd spent for 2 weeks discussing was that the weekly charts were still in a buy mode of the Dow and the S&P, and certainly the monthlies were in a buy mode. What's really important about this, and we'll go through it right now, step by step, is that the spike to a new high, let's start with the E-mini that I'm showing right now, 3.50, extended the weekly chart. The weekly chart technicals are really just, they mix because the stochastics at 85%, that's good. Relative strength is positive, not as high as it was earlier in the year, back in March, but it is holding well. And the MACD is working very hard to turn positive. And if it turns positive, it can still flatten out, but maintain the upward mobility here. The 120-minute chart should make a leg D above 2461.25. That'll extend Friday's leg E/B. My thinking right now is that I don't want to really change it. My leaning is towards saying it's a B with a couple of new highs. Not sure exactly how that'll work. I've got the Chapman Wave 5 still hanging out there to be formed. So let me just give you parameters. If the S&P at 2459, this is the futures, up 3.25 in the next 3 days, 2.5 days, by Wednesday's close, if there is a dip below 2442, that's 16 points from here, about 160 Dow points, that'll be very negative and suggest that at best is a sideways movement with just fractionally new highs. If in fact today there's a little bit of more of a push and it breaks above 2461.25 today rather than tomorrow, my thinking is it'll be tomorrow. We try to form some kind of a peak for today. But if it is today, that really extends things and it starts to actually improve the technicals so we can keep going slightly higher for a little while longer. So now let's go to the nitty-gritty. So you've got the Dow. The Dow Industrial Average is up 7 at 21,644. The high on Friday was 21,681. I think there's quite a good chance that we're going to make a peak C today and then move on to a D. However, this is going to be very important. Let me just give you numbers. 20,520 is the 9-period moving average. Major support that must hold. Go below that, close below that, very negative. Close in the 21,690s or higher, and that just merely extends us. And it says that weekly breakout in leg C in the Dow can push even higher. And this, if I'm correct, that this is now a confirmed leg C rather than an alternate count, then what we're really looking at is that any pullbacks should be just intra-week or maybe a 2-week pullback, and then you go to leg D, and that's where we've got to be really careful. That could take us into August, if that's the case. All right? Let's do the same thing with the S&P, SPX.X. The S&P, I can call this an E/B, but everything about the MACD, strong MACD, stochastic now at 86%, suggests that there should be higher highs. When you've taken this amount of time to consolidate, then break and close above the previous high, in this case, the 19th of June, 24th, 53.82 was the high. That's quite a positive. You used up time rather than price. So now you have a little bit more of residual strength. But the weekly chart, unlike the Dow, is bumping into resistance. And you want to see 24. The high on Friday was 24, I think 62 was it? 24. 63.54. You want to see about 23.66s, and that'll be positive. Then it'll say, hey, nice move, raising the base for the week. Let's see what happens over a period of a few days. I'm going to go to the VIX index. There was some discussion just a short while ago between Tom and Tommy about the VIX index. Let me just show you something here. The VIX index, I don't know why they keep doing this, but someone's misreporting. They had said that the lowest low since 2006, 9.39, but there was a low before that that was important. Where was it? I'm missing it. 9.39. Oh, that's right. There was a low before that was very important, and that low was 9.31 back in 1993. November. What was being reported is that it's been the lowest low. That's 2006. So that's 11 years. Sorry. That is 11 years in terms of making the last important low in the 9 area. That was 9.39. But before that, you had gone 10 cents, 8 cents lower to 9.31 back in 1993. So I wanted to say that there's a space that's going on. 93 to 2006, 13 years, 1206 to add 13 years, you get to 2019. Isn't that interesting, huh? So there's a cyclicality here that we're going to be looking at. But in the meantime, back at the ranch, my thinking is that the VIX index at 9.80, all I'm going to make of this is that it's really important to keep in mind that a volatility index below the teens, below 13, and then certainly below the double digits, in the single digits, like in the 9s, is buying pressure. Now, this buying pressure should be seeing the Dow actually much, much higher. So what I'm saying is that think of the volatility index as being a cushion of support, number one. And then number two, it releases the upside. But then you need the upside have to be almost independent, that there's enough upside momentum between leadership. And you want leadership to be all universal. You want it to be right across the board in all the indices. In fact, what we've got now is, now I can just run this quickly. Let me show you. The Dow, INDU, all-time high, goes to leg E in the monthly, leg C in the weekly. S&P, SPX.X, leg D in the monthly, leg D in the weekly, and leg, I'm calling it B for now, could turn into an E, but everything about it says it's a B in the daily. So what I'm looking at here is that within the longer term time frames, what's really important, and here we get to the nitty-gritties, that if I go to the QQQ series, there is no new high yet. 143.90 was the high of the 9th of June, had a fabulous retracement, which goes back to 135.80. So that is, where were we, 8 points. And then it has a big run up and goes to the 142.60s high today, but it's underneath a 1.5, a 1.25 above the all-time high. But the cup formation with the Chapman wave falling X says, hey, holding here for a day or two, taking a rest, and then pushing higher, should see a touch of the 141.90 level. Basil Chapman, Tight Ignitions Hour. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, so let's just continue with this theme because the IWM, the Russell 2000, has had a high-level consolidation. We've been talking about that for 2 weeks. It is at 142.34, just less than a point away from an all-time high. I suspect it's going to make that high. Leg D in the weekly, and then leg D in the monthly. Leg E went to a peak E in the weekly chart, but I might have to rename this if, in fact, there's a new high above 142.90. So, so far, acting very well. The technicals are starting to improve a lot. And let's go to the back to the QQQs just to show you the little doji forming right now. It's just suggesting that maybe there'll be a pullback tomorrow to make a peak A, and that's going to be important. Do we start a new gray leg B, which is going to take you to a new all-time high, or is this a stalling formation? My thinking right now for the week is that this is part of the stalling formation, and it'll be real simple, that if you get all of the indices, and that's the point that I was trying to make before, we haven't got them. If the XLK, also spectacular single leg A to the upside from a trough D, if that, let me just type this in, if at 57.03 high today, 57.62 was the all-time, was that the all-time? I believe it was the all-time high. Yep, that was the all-time high for this index, Spider Fund. If that acts very well, then either we extend leg C in July or we do that in August. And that's so far saying that this consolidation has taken time, not that much in price, unless, of course, you bought it 50 in the 57s. You sat there while it went down to the 54s. But let me tell you, this is nothing in comparison to the move on the upside. So XLK, what was the other one that the SMHs. The SMHs, we spoke about that Friday. Whoops, type it in here. The SMHs, which is the semiconductor ETF, market vector semiconductor ETF, 89.72 was the all-time high, pulls back to 80.92, rallies strongly above the previous retracement high at 88.66. It goes to today's high of 87.04. Now it's pulling back a little bit. And I suspect here again, this is going to be very important. My eye and technical indicators suggest that the SMHs are about to turn around, that there's a chance they might not make a new high. Let me look at Intel. I had a question about Intel. I had a question about Intel And I don't see very much in Intel. The questioner said it's starting to improve. Could this be an important move to the upside? And my contention is that Intel is really not there yet. It seems to be wanting to build a base, but I'm going to hold off. I think a little later in the summer, you can see what happens with Intel is going to be very important. It has made an arched double bottom. It's at 34.40 down 28 cents. I'm just going to give it a little time. If in the next week it suddenly trades at 35.50 to 36, I'm just going to have to say, you know what? Not bad action at all. Look, that would be the 200-period moving average at 35.32 and a little higher. Now, what's really important about this is that when you've got something like an LRCX, which is Lam Research, had a stronger rally than Intel. It's in leg B. It's the same sort of thing. That weekly chart is saying to me, if it stalls here from 156s and goes to 151 in the next 2 weeks, that's it for a little while. And my leaning is towards that there's still a consolidation going on, but that's just my leaning. So the answer is, I don't see Intel as a buy yet. I think it's going to be later on based on the monthly chart, but I'm just going to have to give it time to consolidate. Hope that helps you. Next question was, what about the GLD? Well, if you look at the GLD trading at 117.32, this is the second day with a gap up. Did it gap up completely with a space? It did gap up. The high of 117.25 on Friday, 117.23. No, it didn't gap. Well, it did gap up, but it filled the gap. So I'm looking at this, and I'm just wondering why gold is having these little gaps to the upside, but really it's not having strong follow-through candles. I don't want to just see gap up, gap up. I want to see a nice strong move where you can get a green candle at the close rather than the red candles, even with the gap. A couple of reasons for that. Because the weekly chart is still suggesting that there's no internal strength. No, I've got to put it a little differently. That the internal strength of the MACD not having broken down but having pulled back has seen a little deeper pullback in price than I would have anticipated. And because of it, if you think of that leg D and peak D, let's call it, on the week of the 9th of June at 123.31, and you think of the candle of last week, and even last week the low was 114.80, and today's low is 140.83. So think of last week's candle. Think of that as one candle, and then you'll see that it was an engulfing of the whole of 2 months worth of trading. So I'm just a little skeptical for subscribers. Yes, we have started. We started a position in the gold stock just to see if this is going to be. It should act well. If gold is going to act well, I'm going to make the stop very tight by the end of the day. We'll just see what happens. But I've done it. I can't say reluctantly because I did it, but I did it skeptically, saying, I'm doing it because the dollar has shown such weakness. Gold surely should be much higher than this, and it's not. And something is wrong with this picture. Look, the dollar made a new low today. It's just acting horribly. And yet, look at the gold contract. Why is the gold contract? It's up 5.3 at 12.32. My question is, why is gold not at 1268 to 1280 at this point? No, actually, it should even be high. It should be a new recovery high in the 1300s. So far, I'm finding something's wrong with this picture. Now, what I did do, the reason why I wanted to get into a gold stock is that my thinking here is that the Fed is going to try very determinedly to have some kind of inflation. And they want the inflation that they count, not the inflation that you and I have to pay for, that's never counted for some reason, policies, insurance, whatever it is. But the inflation that doesn't seem to ever be counted because it doesn't look like Yellen or anyone else goes to a supermarket. There's inflation, believe me. But there is choice, and I think that choice is very important. And that's really one of the things that's kept inflation low as a number. So this is what I'm looking at. Gold, if they want inflation, I think it'll be reflected in gold. So I'm just saying, is it going to start now? We'll see. We'll just start a position. That's really what I did. Another question was, what about Caterpillar? Caterpillar is holding beautifully. It's walking the 9-period moving average, made a round number 110 high the other day. Hasn't taken it out yet. I'm going to be watching that. I've got it as a leg F in the weekly, but really the technical is suggesting that doesn't look like an F at all. Looks like a recycle. A leg D in the monthly. The monthly hasn't gone to an all-time high yet, which was 111.46. The high so far is 110 round number high. That's what I was saying. So we're going to be watching this very closely. And the other thing was FCX, and that's copper. Whoa, look at that nice move in FCX. This is A, B. You know what? That break is going to give me a chance just to notate this. Leg C in the weekly. Very nice. So, got a couple more questions from the Dan and subscribers and folks that have emailed me. We'll get to them all as soon as I get back. Basil Chapman, Dow's up 10.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So when we're looking at the FCX, which is the Freeport McMoran, it's a copper company. When you look at the last high that was made back on the 26th of April to 13.79, when you go down to the low of 11.03, I think it is 11.05. 11.05 back on the 2nd of June, you get peak A, peak B, and then an inside ABC, then it goes to a D and an E. And there's your trend line resistance. And this is suggesting that by about the 27th of the month, could be earlier, but by that time, you've got a left side, right side price time matches should take you to the 13.79 area. However, what's going to be very important is that the technical improvement in the weekly chart must continue, and then you want to see a close above the highs of the week of the 28th of April at 1379 and 1383 the week of the 7th of April. You want to close above all those. I'd even include this candle right here of the week of the 3rd of March of $14. That's really what you want to see. Why? Because the monthly chart is really it's not that good looking in terms of price. The MACD is holding very well. Stochastic is not that great. So you want to see improvement in the stochastic to complement what you see in the MACD, fast-moving average of the MACD. So that's what I wanted to do there. Then I know Steve Rhodes always talks about the yen. I'll just sort of state this again, just to be really clear. When I'm talking about gold, and I'm talking about the relationship, I always talk about gold in relationship. If you look over a year's time, there are periods where about 6 to 8 weeks where gold and the dollar are not going in counterpoint, but actually move in the same direction. Not the same percentages, but the same direction. We sort of saw that over the last period where gold was going down and the dollar was going down. But his point is always very important. He looks at the yen futures, and that's the relationship, the correlation between gold and the yen futures is really, that in fact is a direct relationship, whereas the relationship that I'm looking at in terms of trends is just the larger picture where there was a period for years where you got an absolute counterpoint. It was like a Bach fugue, where you had these diverging themes that were going in opposite direction. And that was exactly what you would see, and it lasted for a long time. Things have changed. So yes, good point. Thank you, Steve, for pointing that out. And the correlation, let's go to the euro, EUR USD. This is the euro dollar, which is holding very nicely within a rising wedge formation, trading at 1.14644, down a tad. I've got it. I could give it an alternate count. I don't want to do that right now. I am calling it F, and I'm just making it real clear that if the euro dollar at this point is able to get into the 1.482 area, then there's a real good chance that it's going to try for 1.60, the 200 period moving average. In other words, that the bias will be towards going higher. Whereas ever since it broke down back in the 22nd of August of 2014, you haven't even come close, not you, the euro dollar has not even come close to the 200 period moving average. All of a sudden, the MACD is holding well, stochastic at 95% is good, 9 period moving average is up, it's above that, and the magnet of 1.160 is unfolding, and that's why I'm looking in the weekly chart. And then monthly chart had that pattern we always talk about. The lowercase h goes to a lowercase u, and that the lowercase h goes to a lowercase m, and that in turn, when it successfully breaks below and closes above the left side lower importance, that's the low of 2015, you can not only see it go higher, but it can go above previous left side peaks and test the major peak. In this case, those are the highs of May of 2016, 1.161, and even the high of August of 1.171. So those are the parameters I'm looking at. If you look at the USD JPY, so that was the euro dollar. Now, if you go to the yen, I'm calling this a peak F at this particular point because the MACD is crossed negative. The stochastic is down to 56%. And you've got this arch that goes to a lowercase h that becomes a lowercase m in the weekly chart. And that's just suggesting chop, 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 a limit between 113-ish, 113.50, 58, and the 200 period moving average of 111.35. It's kind of the range I'd be looking at right now, and that would be the US dollar Japanese yen. So that says to me that the weakness in the USD JPY currency pair is something that we have to watch. If it goes lower, then we're going to see what's the relationship. Is it going to be a spur, a propagator of higher prices in gold? Okay. Now, a question I had was in the den was, would I look at FFWM, which is a financial, First Foundation Inc., I think it's a financial, made a peak D in the daily, kind of stuck above the 9-period moving average in a trading band. Usually when I get this flag pattern, I just put in a big rectangle like that and say, okay, I should trade between that until it decides. This particular move suggests that it could have, in a shorter time frame, or in that same time frame you're looking at, 4 peaks to the upside that goes just under, exactly to, or just above the previous high of importance at the peak of the 12th of June at 16.94. And then you got to pull back into the middle. And that's kind of what we're seeing right now. I didn't finish the weekly, but the weekly has the same thing. A, peak B, stuck in a range. So I don't see it breaking out right now. But if you think it's, if you're holding it, I just keep holding it. It's holding very well. This pattern says something really good has to break away, push it to the upside to break away from the magnet of the 1660s, and it's the 1660 right now. Sorry, the magnet of the 1630s. All right. Platinum Mike. Platinum Mike, what a play. We'll be listening to you with your platinum play. Look at this. Platinum up 8 at 931.60. Great. A great move. Congratulations. We looked at it the other day, and you just steadfastly said, this is going higher. Boy, you were correct. So what's your PPLT doing? Let's see. PPLT. Oh, gapped up at the low of the day, but it gapped up. It's at 88.75, up 0.59. Now, it's really worth watching all these plays in the metals and the whatever's going on, because there's a relationship here that's very important. You see the way the TLT is acting, plus 0.22 at 123.55, the iShares Treasury Bond ETF. Well, have a look at what happened on Friday. Nice move, gets close to the 200-period moving average and then gets repelled. Now, when you're coming down, you see the importance of this 200-period moving average. Look how it acted as a resistance, then a support, boom, breakthrough to the downside. Now it's resistance. So 124.28 is going to be really important. This all goes to this whole inflation thing. If the Fed really wants inflation, you're going to have to see the TNX. There it is, the TNX, which is trading at 23.19. actually break into the 24s, and it really needs to do that by about Thursday of this week. It's at 23.19, unchanged. Basil Chapman, Tiger Technicians Hour. We'll be right back. We've got a lot more questions I'll go through.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Yes. So let me I got a bunch of good questions from GT. One is, where was it? I just had it a second ago, and I'll find it again. Yeah, there we go. If S&P doesn't top out here, or hedge funds who are down for the year will start to chase performance. Critical level here, you agree? I do agree, but I'm going to agree for a number of reasons. I'll go into them in a few minutes. Guy from Trader Audio on CNBC Asia said low rates mean no place to go for dollars but the stock market. You agree? You know, that's been the theme for a long time. Yes, it's absolutely so. But there are so many other factors as well that are going into this. And it has to do with this whole mega theme that I look for. Giga was the word I used a long time ago. And then I said, you know, mega sounds much bigger than giga. I mean, just the way it is. And I'm actually putting together a whole bunch of the latest in the mega. But one thing that's important, you know, that London has had a very severe downturn in real estate, and that's because of Brexit. So that's going to be a very interesting phenomenon because that could delay a bunch of things. And then another question is topping for capital markets, Wall Street firms. Well, you know, when I didn't send out as many charts over the weekend to subscribers as usual. I really wanted to step back because the Dow made that new high. Just wanted to reassess because those weekly charts were still holding so well. And doing that, I went through some of the financials. I went through some of the banks. I went through, for instance, why GE right now is down one. It's actually unchanged at 26.77. Its change is like a chameleon. It keeps changing. Whatever the fad is, or it was the financials. GE was a financial. Now it's more into oils. I don't know what's going on with GE, but that monthly chart is saying to me on a very short-term basis that we're getting to a point where you've got to be a little bit careful to the upside, but constantly be selective in your picks. That's just the best thing in my portfolio, in the portfolio that I try to put together for subscribers, some of which we don't have, some of which we do, but these are the stocks that we're looking at. There have been some real nice breakouts to the upside, and that's really important. That's market independent. I like market independency. However, if I look at my Dow Quartet, look, IBM with earnings coming out is tomorrow after the close. Hey, down $1.42 at 158, just not a good-looking chart. It's going to have to do something spectacular to get back into the 158, 160 area. Triple M, fabulous moves over the last year. Just the last month or so, it's just been consolidating, hasn't done much after that peak F in the weekly. Still only a C in the monthly. UTX, the fourth one in my Dow Quartet, made a peak G about 4 days ago, and now it's settling down, just digesting the gain, holding the 9-period moving average. Monthly chart, the weekly chart went to an E. I could call that a recycle, but right now E is good enough for me. And it's just consolidating here. Monthly chart, 124.45 was the all-time high. The most recent high was 124.79. So we squeaked to a new high, so there's a V-shaped potential for some kind of a digestive form. So that's why I'm saying a little bit more to the upside. Then maybe we have some kind of a pullback. But what's really important is looking at all the different things. I showed subscribers over the weekend that the real estate last week, the HGX, Philadelphia Housing Sector Index, had gone to an ABC alternate count. This is a D. And that D in the daily And a D in the weekly says, okay, now we might be getting something to watch very closely, because a break to the upside from 285 into the 290s would be really positive. But a pullback says you've got this digestive period continuing, and we could go down to the 282, 280 level. And that's something to monitor. So it's a very selective, even though it doesn't feel like it, I think this is a very selective time. So that's why some of the questions that I've had, for instance, there was a question about Walmart. Well, Walmart, having another good session today, is in the category where I say that retail got so badly hurt over the past couple of months, or many months for some stocks, but weeks in other stocks. After all, Walmart just the other day was in the 80s, and it drops down to the 73 level. Now it's at 76. So I'm thinking, if we constantly keep that rotational aspect up, then you'll find that maybe the market does hold again, because all of a sudden you've got the Walmarts having a counter trend rally. You have before I hit IBB, I was going to go to Home Depot. Question in the dinner about Home Depot. See, Home Depot is having a nice bounce here, but in the weekly chart, it's had a consolidation from just over 160 to just over 150, say 151, and now it's at 154. It's trying to be in a containment area. So that's why I'm saying, keep in mind, we've got a rotational correction going on. That's what's really holding the market up. But within that context, you can pick some stock. I'm finding more longs than shorts, but I'm getting close to, I think in the next 2 days, there's going to be a plethora of shorts coming out, individual stocks. But right now, just holding gunpowder so that we can have some add tos or some new positions. And some of the positions could be on the short side. Then I had a question about, did I actually look at that? What was that? What was I going to look at before? Yeah, I think I did. Wow, there were so many questions, I'm kind of lost now. Oh, FFWM. Yes, I did that. FFWM, what I was saying. Where did it disappear? I don't know why that defaults to FFWM. There. Oh, I did that. Okay. Rectangle formation, more like a cup, and is bumping into resistance. Still looking very good. I just don't see it breaking out right now. It needs a little more time. So then there was one. Oh, there are. Yeah, Bob. Okay, IYT. This is going to be very interesting. I showed the IYT over the weekend. Yeah, I did. And then what I said was leg E in the daily. Very good technicals, but getting a little toppy. I'm calling this, at least for now, leg B in the weekly, but it should really be an alternate count, E/B. Not the point. The MACD is good, and stochastics at 96%. That is really good. And then the monthly chart is in leg D. So you had a confirmation. That's really what I was talking about over the weekend. That you had that old traditional Dow and the Dow and the IYT coincide at all-time highs. That's usually a good thing. Funnily enough, the history for me, just by memory, I haven't really gone back. It sits there at the back of my mind saying, over the years, how many times have you seen the coincidence where the IYT confirms the Dow move, or the Dow confirms the transportation index move, and very soon after that you get a sudden sharp decline? I'm in the camp here that says, got to be a little careful. I think we're getting close to a sudden sharp decline. I'm not talking about, we haven't got any bear market activity right now, but I keep telling subscribers, I've said it for days and days, this is still not bear market material. Bear market material is when there's the market perceives whatever news it is as bad. That bad news comes out in a little bit of a chunk, and then it stops, and then it comes out later on, a couple of weeks later, and then a couple of, in shorter time, and then shorter and shorter and shorter time until it accelerates. That's how you get bear phases, and the market opens at the lows, tries to rally, fails, closes at the lows. S&P opens down 12 or more points every single day, tries to rally and fails. That's bear market. And the VIX index, which we just dealt briefly on, doesn't stay in the 9.85 area. It starts to get to the double digits, and at some point when it's in the mid-teens, you start to get your triple-digit Dow closes 3 times in the week. That's really what a bear market is. We don't have that yet. We're looking at 5 as soon as I get back. Question about it. Basil Chapman, Tiger Technicians out.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So let's just quickly go to 5, which is Five Below Inc., another one of those in the retail area. No, that's Five Below, but it's trendy clothes for $5 or less. So it's just trying to break the resistance. The question is, what do I do about it? I would say hold on for now, because I think this is the area that's going to have a little bit more of a bounce. Remember, we're looking at the Walmart chart. We're looking at some of the retailers that just got hammered. They deserve a little bit of a bounce, and that bounce could be time, it could be price, it could be a combination. So this fits in that category. I would just say to you, it's at 47.75. I feel very comfortable saying that if it breaks below 45.60, which is 2 points, that's 5%, on some part of your position, I'd be out at that point, because then I think it's going to dip below the 200-period moving average and just struggle for weeks to try to break into the 48s. So that's the way I'm looking at it. And if it holds, I would raise that stop at 48.60, somewhere around there, less than a point higher. I would raise that stop proportionately, because I think this is in the air. But the weekly chart still suggests it might need more time. But if there is a rally that takes it above 50.30, above that high that was made at 49.95 back in the week, back on the 3rd of July, if it's able to close nicely above that, you've got a change of trend that says you can go a little higher. I don't know about making that leg D just yet in the monthly chart, but it would say holding beautifully compared to the other retailers who have tried to rally and they keep failing. So this is very important. So those are parameters I'd look at. Next question was, it's so funny that this came in. This morning at about 5:30 or whatever it was, when I just happened to put on CNBC. I don't have it in my office anymore. I don't have television in my office anymore. I just decided did not need it. But I went down and looked at it. So I'm looking at it and I see DDC. It keeps going by with a nice move to the upside. So I said, I've got to look at it. And then, of course, I completely forgot until I just got an email asking about DDC, Harry Winston Diamond, Dominion Diamond Corporation. Harry Winston Diamond? Anyway, DDC trading at 14.05, up 57 cents. Yeah, this is I'm going to call this B for now because it's in the monthly, it's in the daily. It's everywhere. It's making a new recovery high, not all-time high, but recovery high. Just make it real simple. If you are in it, fantastic. Congratulations. I don't know how you got into it because maybe it was Friday when it had that big move up. But if you got into it before then, hold on. And what I would say to you is this. Make a stop on just a third of your position. I would put a stop in at 1380 because in the next 2 days, if it doesn't even come down to 1395, doesn't even break today's low of $14 round number, but in fact makes a new recovery high. Something's going on there. I don't know, maybe I don't know what it is, but this is really nice action. Now, would I buy it? Yeah, no. So I can just give you already in it. That's what I'm going to say to you. So now let me do a couple of things. Within the context of where we are, let me just do this INDU. Let's go to the Dow. I believe there's a good chance that this is a peak C. I'm not going to call it a G/C because it's just the start of a breakout to the upside, and the stochastics at 87%. However, there's a pattern that I talk about with subscribers just infrequently, but over the many years, I haven't even watched the show for I don't know how long, but I call it the Bart Simpson hairstyle. It's these spikes to the upside that keep coming back. That's a pattern that I think you got to look at and start to study very carefully. Why? I think it's a pattern we're going to start to see more and more of over the period of the next 6 to 8 weeks. I'm even thinking that I'll put it in part of as a webinar because it's such an important pattern. So in the meantime, what I'm saying is there's a cup and ladle breakout in the Dow that invariably goes to a Chapman wave cup and ladle, invariably goes to at least a D, sometimes even an E. That's what I'm looking at for the Dow. I think we're going to go to higher highs. How high? At this point, I have to wait to see how we close the day. Hope that helps you. Thanks for being here. Have a great day. Stay tuned for the fabulous shows coming up.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,